The day silver broke the system. Hello everyone, welcome back to the channel. And today we need to talk about something utterly historic. Not interesting, not unusual, not a big move. No, I'm talking about the moment the entire precious metals landscape changed forever. A moment that shattered every projection, obliterated every ceiling, and left analysts scrambling for explanations. Because yesterday, something happened that most people said would never happen again in our lifetimes. Silver blasted past $61, not briefly, not tentatively, not with hesitation. It launched. We hit an intraday peak of 61.41, and the surge behind it wasn't gentle, wasn't polite, wasn't orderly. It was violent. It was explosive. It was the kind of move markets fear, because it exposes the truth they've tried to hide. Silver didn't test the 60 barrier. It destroyed it. And the shockwaves of that breakout are still rippling through the financial system. This wasn't a price movement. This was an admission. An admission that the system that kept silver artificially constrained for decades just suffered a structural failure. This is the day the system cracked. This is the day silver declared independence. And this, stackers, is the first day of the new bull run. Section 1. Why this move was different. Let's get straight to it. Silver at $61 is not just another high. It's not just a reaction to macro news. It's not just another speculative burst. This was a pressure release. The kind that only happens when the fundamentals, the sentiment, and the structural weaknesses all converge at the same time. For decades, silver has been suppressed by paper contracts never backed by metal-leveraged futures with no physical settlement, banks shorting deeper than miners can dig inventory that exists only as numbers, government-friendly analysts downplaying shortages. That entire ecosystem was built on one assumption: physical demand would never overwhelm the paper market. But that assumption has now failed, spectacularly. Every sector that matters, every sector driving the world forward, is consuming silver faster than ever. Electric vehicles, solar manufacturing, AI hardware fabrication, robotics, 5G and advanced networking industrial catalysts, energy storage systems, military technology, medical devices. These industries don't need silver exposure. They need actual ounces, and the supply simply isn't there. Global silver deficits have grown for 5 straight years, and 2025's deficit is the largest in modern recorded history. Warehouse inventories in London, New York, and Shanghai have been draining nonstop. Registered supply on major exchanges has hit multi-decade lows. Miners are screaming that they can't increase production. Not at current grades, not at current costs, not with current ore quality. Reality finally overpowered the illusion. Silver didn't break $61 by accident. Silver broke $61 because the system couldn't contain it anymore. Section 2, the moment. The market knew you could see the instant everything snapped. It wasn't news that did it. It wasn't a speech. It wasn't a report. It was the collective recognition by whales, by institutions, by traders, by industrial buyers that silver had passed the point of suppression. When silver cleared $50, it was symbolic. When silver cleared $55, it was aggressive. But when silver cleared $60, that was the nuclear signal. And once that wall fell, the algorithms detonated, the shorts panicked, the hedging blew apart, the supply vanished. Silver didn't rise, it accelerated. This was the exact moment where the paper market realized we can't stop this anymore. And when silver starts moving in ways the system can't control, that's when you know the old era is over. Section 3, the analysts respond. Total capitulation. Within hours of the breakout, analysts across the space began releasing emergency commentary, and for the first time in years, they weren't hedging, weren't cautious, weren't vague. They were euphoric. They were stunned. And many were outright admitting they were wrong. Veteran market watchers called it the beginning of a new metals regime. They said, the real move starts now. The suppression system is breaking. The boat is taking on water. The silver thesis is finally being vindicated. The wave of commentary was unified in a way I've never seen before. Even the typically conservative analysts, the ones who always preach caution, were suddenly talking about structural revaluation. Not a rally, not a cycle, a revaluation. The silver community, the stackers, have been waiting for this moment for years. And yesterday was the day the waiting ended. Section 4, the stacker vindication moment. Let's be honest. For years, silver stackers have taken the hits. Silver is dead money. Silver's a relic. Silver will never break $50 again. Why not just buy crypto? You're wasting your time. People mocked stackers. They called them out of touch. They laughed. But there was always one thing silver stackers had that the critics didn't, an understanding of reality. Silver stackers know the difference between paper and physical. They know deficits matter. They know real supply is what sets real price. They know you can't build a technological world without industrial metals. Yesterday was not just a price surge, it was vindication. A vindication years in the making. Every ounce bought at 17s, at $20, at $23, at $27, at $30, at $40 was validated, and we're not even close to done. Section 5, the massive opportunity. The market missed. Everyone is talking about the spot price exploding, but the biggest, craziest, most unpriced opportunity is happening somewhere else entirely. Silver miners, and especially silver juniors. Right now, you have companies sitting at valuations that make absolutely no sense. Some miners are priced like silver is still $22. Some juniors are priced like silver is still $15. Meanwhile, silver is more than triple that. That is not a small inefficiency. That is not a slight discount. That is a once-in-a-decade mispricing. In every previous silver bull market, miners lag at first, then they catch attention, then they explode, then they multiply, and then they outperform the metal. Silver might go 2-3x, but miners, they go 5x, 10x, even 20x in strong cycles. And this cycle is stronger than anything in 40 years. Mark my words. The miner wave hasn't even started yet. Section 6, the gold-silver ratio, signals what's coming. The gold to silver ratio, one of the most powerful long-term indicators in precious metals, just collapsed into the high 60s. We have not seen that level since the last major silver explosion. Historically, when the ratio is above 80, silver is asleep. When it hits 75, silver is waking up. When it breaks 70, silver is entering a full-blown bull phase, and guess where we are right now? Below 70, fast approaching the danger zone for shorts. The ratio breakdown is not just a technical signal, it is a megaphone screaming, silver is outperforming everything. Section 7, price targets, where we're heading next. Now that silver has shattered the $60 wall, everyone wants to know, what's next? The targets being discussed right now are the most aggressive we've heard in decades. Target number 1, $63, short-term momentum. The first stop after a blowout like this is usually a quick extension. With the volume behind this move, $63 is practically on deck. Target number 2, $70, or a major psychological level. This will cause absolute panic among shorts. FOMO will hit retail, ETF inflows will surge, industrial buyers may start scrambling. Target number 3, $80, $100, new trading range. Many technical analysts now expect silver to stabilize in this region before attempting a moonshot. Target number 4, triple digits, 100 plus. This isn't fantasy anymore. This isn't hopium. This is math. When? Deficits are expanding. Supply is shrinking. The cost of new mines is soaring. Industrial demand is exploding. Investors are piling in. Currencies are weakening. Silver has no ceiling. Triple digit silver is not a question of if, it is a question of when. Section 8, the social media explosion. A global movement. Now here's something wild. Silver didn't just blow up in the markets, it blew up online. Within hours of the breakout, influencers posted urgent updates, their views skyrocketed, comments flooded in, community posts went viral, engagement hit record levels. People who haven't talked about silver in years are suddenly shouting about it. Finance channels that ignored silver for a decade are scrambling to release videos. Popular commentators who once mocked silver stackers are quietly deleting old posts. And the biggest tell? The bears have vanished. Not a whisper. Not a counter-argument, not a warning take. Silence. When bearish voices disappear, when the opposing side goes quiet, that's when you know the market has entered a one-directional phase. And silver is in that phase right now. Section 9. The institutions finally admit the truth. Let's talk about the mainstream. For years, large institutions denied shortages. They shrugged off deficits. They blamed everything on temporary technicals. Until now. Suddenly, Bloomberg acknowledges supply risk. Reuters confirms industrial shortages. ETF data shows physical drain accelerating. Banks admit silver is underpriced. Commodity desks upgrade their outlook. TD Securities openly says $60 is too low for new mine development. Read that again. Banks are saying $60 silver is too cheap. The same institutions that said silver would stay between $20, $30 are now saying the current price doesn't support future supply. This is the moment where the narrative flips, where denial becomes acceptance, where acceptance becomes panic. Because once institutions admit the price is too low, the next move is inevitable. They buy. And when institutions buy silver, they don't buy $200 worth. They buy tons. Section 10, the day the system shattered. So let's step back and see this for what it really is. Yesterday wasn't a breakout, it was a rupture. The paper market that kept silver artificially subdued for decades finally collided with the physical world. And the physical world won. This breakout exposed the true extent of shortages, the fragility of the paper market, the weakness of the dollar, the desperation of shorts, the unstoppable rise of industrial demand, the failure of suppression, the beginning of a global shift into real assets. Silver didn't move because of speculation. Silver moved because the system lost control. We have entered the phase where silver is no longer priced on illusion, but on reality, and reality demands higher prices. Section 11, where this is going, the silver supercycle. Let me be absolutely clear. What happened yesterday was not a spike, a hype-driven anomaly, a false breakout, a pump, a short-term bubble. This was the launch of the silver supercycle, and supercycles do not end in days. They do not end in weeks. They do not end in months. Supercycles last year's. And silver's setup, with its unprecedented deficits, its industrial surge, its monetary tailwinds, and its structural revaluation, is more powerful than anything since 1979-1980. We are at the beginning of a multi-year repricing that will take silver far beyond anything the mainstream is prepared for. Final section. The bull run begins. So let's wrap this up. Yesterday wasn't just a green candle. It wasn't just a big move. It wasn't just a fun day for metals. It was a signal. A signal that the old system, the one built on paper manipulation, on artificial ceilings, on imaginary supply, just suffered a fatal break. The signal that physical metal has taken command. The signal that the world is waking up. The signal that stackers were right. Silver breaking $61 is the start of the bull run, not the middle, not the end, the beginning. The question now is simple. Are you positioned for the wave, or are you watching it from the sidelines? Because this wave isn't stopping. This wave is just accelerating. This wave is the silver supercycle. Stackers, congratulations. Your time has arrived. Keep stacking, keep preparing, and welcome to the new era of silver.